What's up, y'all? I just want to make another quick video. This is just going to be me going through the motions of setting up a trade. Um, I think I might do commentary over it. But yeah, just bear through me. Bear with me. Uh, the other video was an hour of me explaining what OCO was and all that stuff, but this is just a quick video of how to place the orders if you want to watch that as well. And I'm going to be buying just a random stock. So I'm going to be clicking on trade at the bottom of your screen here. I'm going to be doing QQQ, select option chain. Um, for this example, it doesn't really matter, but I'm going to scroll down and just select the $90 calls. This is the 513 strike. And I'm going to place my order from market to limit. Then I'm going to scroll down and do market conditions. And then where market conditions is, I'm going to submit a market condition. So I'm going to select this toggle. Once that toggle selected, I'm then going to add a condition. Let's just say our daily trigger is at 600. So this is where we put that. This is the threshold. Threshold just means trigger. So we're going to say 600. This is all for example purposes only. So these numbers are made up. So that's where we put the trigger at, our daily trigger, our weekly trigger, anything of that nature, right? If it's calls, we're going to do at or above. If it's puts, we're going to do at or below. You feel me? So we want this to trigger at or below this price if the stock goes there. And if we do this live, like right when markets open, you don't have to worry about it gapping. And then if we're doing calls, we would put at or above. And then for method, we would leave it at market. And then QQQ obviously is our symbol. So I hit done. Now that that's done, it's going to buy contracts when QQQ reaches $600, right? The stock price. That's what that means. So then once that's done, you scroll back up. Because we selected limit, we're going to go over here and now select that button and then scroll down and do market, right? Once that's selected, you're going to now go over here. This is saying now if QQQ goes to 600, it's going to buy those contracts plus 10 cents more. No, we don't want that. So we're going to put zero here. And this is essentially going to make this a market order, even though this says limit, right? This says market, so that's all that matters, right? So if you want to sell all of your position, if you want to buy three, you would put that there. If you just want to buy one or two, you would just put that there, right? We just want one contract. So for 87.65, that's how much it's going to cost. If the trigger triggers those 87, depending on how far away it is from the trigger, these contracts might go for a little bit more. Just keep that in mind. But this is how you set it up. So QQQ, market price, zero, limit order. Down here, you want to set your market conditions at the trigger, weekly trigger, daily trigger, right? So that's done. Before you hit review, you want to go over to more, and we're going to set up our um, trailing stop and then our take profit. So we're going to click on advanced order. And then we already set up this order to buy those contracts. But once that triggers, we want these two to trigger. So then we're going to hit add order. And then we're going to hit that same order right here again. And then now we're going to set up our trailing stop. So where it says market, we're just going to do trailing stop. And now you go down here just like before in our previous videos. You're going to click the plus and minus, do percent, right? And then we're going to go over here, and this is where we change the percent. Delete everything until you get the minus, right? Once you get the minus, now you could put your 20% there, right? You could do 25%, whatever is clever, whatever is in your risk management, right? So now I have that set, but still we want to set the condition. We go down, set the condition. Me personally, I like my trailing stop to be set as soon as I get into the contracts. So this price is the same as my daily price point. You feel me? If you want your trailing stop to go in later, you just set this number higher. So if you wanted to start at 601, a dollar, you just go in there and do the same thing. And that's how you would set that. But me personally, I want my trailing stop to start as soon as I get into the play, right? And as it moves into my direction, let's just say, I'm just going to lock in profit. So I hit done. So that order is finished. That's our trailing stop. That's going to help mitigate risk. Then we're going to add our take profit. That little window pops up. You're going to click that. We're going to leave this at the market because that's how we normally would do it anyway, right? We only have one contract, so we're going to leave that at one. We're going to scroll down to conditions. And then now, let's just say based off of the strat, it says that the next take profit is 605. Let's say, oh, okay, 608. My finger hit that. So let's just say it moved $8. So boom, it's at 608. So all this is saying now, it's going to trigger this order to sell this one contract. It will not be $86 at that time. It probably will be worth more because now the price is higher than when we got in. It's $8 higher than when we got in. So now we set the market. We got our contract. That's how much it is at the time we set it. We go down here and set the conditions to wherever our take profit is, right? And just hit done. Now we have our order, we have our trailing stop, and then we have our take profit. If you wanted to add another take profit, all you gotta do is do the same thing, but just hit add order, click that order again, go down to the conditions, and make the take profit higher than your other take profit or lower, whatever it's clever. So if we want to take profit again, that was 608. We want to take another profit at 609. We could do that. Boom. And now we have two take profits, and then we have one trailing stop. Obviously, your contracts have to make sense. So if you bought two contracts, you're able to do this. If you only have one contract, you're not able to do this. So the contract quantity has to make sense as well. So yeah, this is just a quicker version of how to set up OCO orders. I have a longer video explaining what an OCO order is. But yeah, once that's done, real quick, you want to hit review. And this is essentially just going to tell you what we just set up. This order number one goes to this order number one, right? This order number two is this order number two. This order number three is this order number three, and this order number four, and vice versa, right? So we have our trailing stop there, and that's only going to trigger once this price is hit, which is the same as our trigger to get into those contracts. Once it moves $8, then this is going to trigger to sell one contract at 608. Whatever that profit is, we'll take it. Then if we had another contract, it's going to go to 609. If price hits 609, it's going to sell this one contract, right? And essentially, people, this is how you set it up. Once that's done, you just graze over that. If you did the last screen correctly, you could just hit send it through, right? Once I send it through, I go back to my positions. Look, that QQQ is just chilling there, right? This paper means that, it's pending, right? Nothing's there yet. If you go to the overview page, you have four working. We have the three that we set, the trailing stop and the two take profits, plus the order to get into that. And that, people, is how you set OCO orders. Peace.